Oil Technical Analysis, September 27th, FXEmpire.com. The light sweet crude market had another fall during the day Monday, but as you can see, it also managed to form yet another hammer. So we now have two hammers in a row at the basically at the 80 mark. This does show how important the support area is and the fact that the market does want to bounce. Now, we don't necessarily want to call for a long-term resume to the overall uptrend over the years, but what we do suggest is that perhaps this is a bounce ready to produce about a $8 move on the high end as we stay in consolidation. If we break the top of the Monday and perhaps even the Friday candle, that is a strong buy signal, as we think that we could probably get $5 or so out of that pretty quick. A breaking of the lows does send us back down between the 70 and 80 consolidation range. But at this point in time, it must be said, two hammers in a row aren't that common at an area this big. So this really does show massive amounts of support for the light sweet crude market. Looking at Brent, very similar situation. Not two hammers in a row, but a hammer for Monday and right where you want to see it. So because of this, we think Brent's in the same category. If we can get a break above the top of the hammer in Brent, we think we're going to pop probably about $10 or so in the Brent contract. Of course, breaking of the bottom is bearish, but we want to break the most significant low, which is just under the $100 mark. So we're looking for a daily close below 100 in order to sell. A break of the highs from Monday does get us buying this contract for probably about $5 to $10. Of course, we'd have to see how our positions play out. We think that 110 will be rather resistive, so depending on the price you get into would also greatly affect your profit potential, but it does look like it wants to produce a bounce at this point.